Hi guys, welcome back. In our previous video, we have started with input tax credit chapter, that is chapter 3, and we have also covered section 16, which talks about input tax credit eligibility and conditions. So now we will be starting with section 17, guys. So we will see section 17 and learn in detail. This is also a bit lengthy section. There are various subsections here and also clauses. One by one, we will see, guys. So we'll start with apportionment of credit and block credits, section 17. Below is a list of few situations as mentioned in section 17 of Central GST Act, that is CGST Act 2017, where input tax credit will not be available. So in the following cases, they are telling credit is not available, guys. In the following cases, credit is not available. Which are those? Subsection 1. Where the goods or services or both are used by a registered person, partly for the purpose of business and partly for other purposes, the amount of credit shall be restricted to so much of input tax is as attributable to the purposes of business. Now, assume, let me just take an example. You have purchased an input on which you have paid a tax of 10,000. Now this input you are using for two purposes. You are providing two outward supply. One is taxable, the other one is exempt. So you are using the input. Sorry, this is different. Just a second. Yeah. Now you are using this input for two purposes, partly for business, partly for personal purpose. Whatever input you have purchased and paid 10,000 tax, you can claim credit only if it is used for business purpose. Yeah. So you are using how much for business purpose, you need to see whether like 30%, 40%, 50%. So whatever is attributable to business purpose. So assume you are using 50% for business purpose, 50% for personal purpose. In that case, how much credit you can claim? Only whatever is attributable for business purpose, which is 5,000. Yeah, this is like section 17(1) comes only when you are using your input service or capital goods partly for business or partly for personal purpose. If you are using completely for business, yes, you can claim credit provided other conditions are satisfied. If you are using completely for personal purpose, no credit at all. No credit at all. Even section 16 subsection 1 clearly tells the inward supply, whatever you have taken, should be used or intended to be used for the business purpose. So 17(1) is giving clarity when inward supply is used partly for business, partly for personal purpose. Whatever is attributable only for business purpose can be claimed. Yeah, and how to calculate this and all, there are rules given. Okay, so I have told you. So you need to identify how much you have used for business purpose, like 40%, 50%, whatever percent. Only that much credit you can claim, guys. Clear? So this is what is told in section 17 subsection 1. Then coming to 17 subsection 2, similar to this. Now assume you have purchased an input and you have paid 10,000 tax on it, or let me take other amount, 25,000 tax on it. Okay, sir. And you have used this input for producing two things. Okay, you are supplying two goods, two outputs. One output is taxable supply, whereas the other output is exempt supply, guys. I repeat, you have purchased an input which you are using to provide outward supply. Okay, but one outward supply is taxable, the other one is exempt. You are supplying two output goods. One is taxable, one is exempt under GST. In that case, with respect to exempt supply, you cannot claim any credit. Yes, sir. But with respect to taxable supply, you can claim credit. Now please pay attention. If there is any goods which is used only for manufacturing taxable supply, you can claim full credit provided other conditions are satisfied. Same way, if there are any inward supply which you have used to provide only exempt outward supply, you cannot claim credit at all. Zero credit. Agree? Yes, sir. But now 17(2) is talking about some extreme situation where there is one inward supply which I am using to provide taxable outward supply as well as exempt outward supply. So this is outward supply. My outward supply is, there is one taxable supply, the other one exempt supply. In that case, if the same input or input service is used for both, then whatever is attributable to taxable supply only you can calculate. So total credit is how much? 25,000. Now out of this 25,000, how much ever is attributable to taxable supply, only that much you can claim, guys. That much you can claim. So how to calculate it? Simple. So you calculate turnover. Okay, means what is the total turnover from taxable supply? Assume it is 10 lakh. Okay, what is the total turnover from exempt supply? Exempt includes three things. You already know it. Okay, here some more adjustments are given. We will see that later. So assume the exempt turnover is 5 lakh. So what is your total turnover now? Adding both, 15 lakh. Agree? So 25,000 is for producing both the products. So 25,000 divided by 15 lakhs. 15 lakhs into what is your taxable turnover? 10 lakh. So whatever you get, that credit you can claim. Hope you guys got it. Simple, guys. 25,000 is the total input tax paid. Okay, divided by total turnover into what? Into taxable turnover. This is the credit which you can claim. If you want to calculate what is the credit which is attributable to exempt supply, which you cannot calculate, then instead of 10 lakh, you can take 5 lakh. You will get what is the credit which is attributable to exempt supply, which cannot be claimed. Hope you guys got it. So how to distribute the credit for taxable and exempt supply means using the turnover. What is the taxable turnover? What is the exempt turnover? Add both, you will get total turnover. Based on that, using that as a basis, you will distribute the credit attributable to taxable supply and exempt supply. This is as per which section? 17(2), guys. Yeah, let me read. Subsection 2, where the goods or services or both are used by the registered person partly for affecting taxable supply, including zero rated supply. So taxable supply includes zero rated supplies because zero rated supply is also taxable supply. Okay, under this act or under IGST Act, and partly for affecting exempt supplies. Under the said acts, the amount of credit shall be restricted to so much of input tax credit as attributable to the said taxable supplies, including zero rated supplies only. So subsection 2 is applicable only when same inward supply is used for both taxable outward supply as well as exempt outward supplies, guys. If an inward supply is used only for taxable outward supply, you can claim the credit, provided section 16 conditions and all is satisfied. Now, if there is any inward supply which is used only for providing exempt outward supply, you cannot claim credit at all, zero credit. Yeah, so 17(2) is talking about partly. I'm using one inward supply for both outward taxable supply as well as outward exempt supply. In that case, proportionate part I need to calculate, which I have shown it in my example. One question also is there which is asked in the exam on this. We will be doing it later, most probably in the next video. Example: a registered person manufactures a product X chargeable to 18% GST, a product Y which is chargeable to nil rate of tax, and product Z which is exported without payment of tax under bond. So there are two taxable products which is X and Z. Z is zero rated, still it is a taxable supply, whereas Y is nil rated, which is nothing but exempt supply. Okay. Now all the three products are manufactured from the common inputs and input services. To produce all my output X, Y, Z, I'm using same raw material or same input services. ITC on the input and input services attributable to product Y being exempt supply shall not be available. So I need to calculate how much is attributable to Y. I cannot claim that much credit. Whatever is attributable to X and Z, which is taxable outward supply, I can claim the credit for it. Hope you guys understood. Okay, I have also shown the calculation here. You guys, if you want, you can take down. I will just explain it once again here. Please pay attention. there is some rules which are given with respect to this calculations and all, but I have just explained it here. And also we'll be doing a problem on this so that you will have a proper clarity. Yeah. Now I have purchased an input on which I have paid 25,000 rupees tax. I'm using this input to produce two products. One product is taxable, the other product is exempt. So with respect to turnover, the turnover from taxable supply is 10 lakh and the turnover from exempt supply is 5 lakh. So if I add both, I will get total turnover 15 lakh. So 25,000 tax has been paid on my inputs, which is inward supply. How much is attributable to taxable supply means how to calculate it. Whatever input tax is paid divided by total turnover into the taxable turnover. If I want to calculate what is the credit attributable to taxable supplies. If you want to calculate what is the credit attributable to exempt supplies, then 25,000 divided by total turnover, which is 15 lakh, into 5 lakh, which is exempt turnover. Clear? And here, only for this purpose, they have also told how to calculate this exempt supply. We already know, guys, what is exempt supply, but some adjustments are given here. Okay, means few more items has to be added. So as per section 2 clause 47, come on, what is exempt supply? It includes three things. Exempt supply under section 11 of CGST Act or 6 under IGST Act, or nil rated supply, and also non-taxable supplies, that is on which the GST is not applicable. Clear? But here they're trying to tell some adjustments also, which is given in subsection 3. Subsection 3 is relevant only for subsection 2. Please be careful. Don't apply this provision somewhere else. So subsection 3 is relevant only when subsection 2 is applicable, guys. Clear? So what is subsection 3 is telling, we will see. The value of exempt supply under subsection 2 shall be such as may be prescribed and shall include supplies on which recipient is liable to pay tax on reverse charge basis, transaction in securities, sale of land, and subject to clause B, paragraph 5 of schedule 2, sale of building, which is nothing but constructed building. Now, what are they trying to tell? So here we calculated exempt turnover, na? So how to calculate it? What it includes, they are trying to tell. We know already what is exempt supply, but here some adjustments. So exempt supply includes now supplier is supplying something to the recipient where RCM is applicable. Who is paying tax on that? Recipient. Okay. So in that case, for the supplier, include it as exempt supply. That is what they are trying to tell. For the supplier, include it as an exempt supply, because he is not paying tax. So include it. Only for subsection 2. Please be careful. Okay. And whatever I am discussing now, please be careful. It is only for subsection 2, guys. Don't think, sir, exempt turnover as all these things. No, actually exempt turnover does not include this one, RCM case. But still, only for 17.2 they are telling it. Okay, sir. Next, it also includes sale of securities. First of all, securities is not a goods also. It is not securities. Sorry, it is not services also. So GST is not at all applicable. But still, they're telling if there is any sale of securities, include it as exempt supply for 17.2. For 17.2. Okay, sir. Fine. Next, they are also telling if there is any sale of land and sale of constructed building. Just a second. Constructed building. So if there is any sale of land and sale of constructed building, these two items are covered in schedule 3, negative list, but still you have to include it as exempt supply. Okay, so you need not worry, please pay attention. Exempt supply as given in 247 plus 3 more additions here. What are those? For the supplier, on his outward supply, if RCM is applicable, recipient will pay tax. So for 17.2, include that as exempt supply for whom? Supplier, not for the recipient. Please be careful. Okay, sir. Then coming to, if there is any supply of securities by the supplier, include that also as exempt supply. Okay. Then one more additional masala. Sale of land and sale of constructed building, which is a non-taxable levy. They've asked only to include this two. Sir, what about the other items of negative list? Don't include it. So for exempt supply calculation, under section 17.2, you have to include only sale of land and sale of constructed building out of negative list. There are other items also in the negative list. Don't include that. That is what they're trying to tell here, guys. Please be very careful. And they're not asked any questions on these things and all. One simple question has been asked with respect to whatever calculation I have shown here. Okay, so complicated thing like this and all is not asked, but still 17.3 talks about this. I have explained it here. Yeah, let us see it out. Let me read this again. Hello, guys, listen here. The value of exempt supply under subsection 2 shall be such as may be prescribed and shall include supplies on which recipient is liable to pay tax on reverse charge basis. So for the supplier, you need to include it in exempt supply. Okay. Transaction in securities, sale of land and subject to clause B of paragraph 5 of schedule 2, sale of building. In simple, sale of constructed building, because sale of constructed building is covered under negative list. Okay, sir. Explanation, because see, sir, why they are referred to schedule 2 is sale of pre-constructed building is covered in schedule 2, where it is treated as supply of services. They are not talking about that here. They are talking about constructed building, which is covered in negative list. Okay, explanation also is given. For the purposes of this subsection, the expression value of exempt supply shall not include the value of activities or transactions specified in schedule 3, except those specified in paragraph 5 of said schedule, that is sale of land and sale of constructed building. See how much confusion they have done. I don't know what is the purpose or logic of this, but still, how they have made it. I will just break it into points and tell. See guys, exempt supply includes non-taxable supplies also. Non-taxable supply means on which GST is not applicable. For example, alcohol, petroleum products, 5 PhD manner. Okay, 5 petroleum products are there. Plus whatever is covered in negative list. Schedule 3 negative list. All this will come under non-taxable levy. So all this is exempt supply. But for section 17.2, exempt supply includes only 2 items out of negative list. All other items is not treated as exempt supply for 17.2. Which are those 2 items? Sale of land and building. All other items, whatever is covered in negative list, is not treated as exempt supply for 17.2. Only for 17.2, not as per the definition of exempt supply. Only for 17.2. Okay. And it includes 2 more items, that is, for the outward supply, if the recipient is liable to pay tax under RCM, it will be treated as exempt supply for supplier, plus transaction in securities for the supplier will be counted as exempt supply, guys. Clear? Yes, sir. Therefore, while in all other items of schedule 3, ITC will not be required to be reversed. However, in case of sale of land and constructed building, ITC need to be reversed, because we are treating sale of land and building as exempt supply. You cannot claim ITC on that. So if you have claimed, or if there is any element of that, you need to reverse to that part. Clear? Yes, sir. So I have explained subsection 3 in detail, but still don't break your head on this subsection 3 too much. Yeah, that is what I can tell. Next, let us go to subsection 4. Subsection 4 talks about one special person. Okay, means special category of supplier. Who is it? A banking company or a financial institution including NBFC. So a banking company, BC or NBFC or FI, that is financial institution. So if the supplier is these 3 special people, only for them subsection 4 is applicable. So let me explain this provision first. Look here, guys, pay attention. See, for the banking, the major outward supply is in the form of extending loans and advances, guys. That is giving deposit loans or advances, for which in return they charge interest or discount. Agree? So, but this services under GST is exempt. That is, the services by way of extending loans or advances for which in return interest or discount is charged is exempt under GST. Okay, it is exempt under GST. So in that case, the outward supply for the banking, this is the major outward supply for any banking or financial institutions. So their outward supply is exempt. In that case, whatever inward supply they have taken, if they have paid tax on that, they cannot claim input tax credit. Yes, sir, they cannot claim. But nowadays, in the present scenario, the banking is also providing various other facilities like foreign exchange, then investments, you can do it. Then they provide locker facilities, they provide advisory facilities. They will also take care of payments to be paid or received by the customers on due dates. So they take care of all this. There are very many more services which the bank may provide. So few of the outward supplies which the bank provide might be taxable. So in that case, bank is providing exempt services as well as taxable services. Okay, maximum is exempt only because their main business is giving loans and advances, which is exempt under GST, but they also provide other facilities. Agree? So bank is providing two outward supplies. One is exempt, which is major part. The others are taxable. Now, if they are taking any inward supply on which they have paid tax, they have to follow which one? 17.2. 17.2. Why, sir? Because their outward supply is taxable as well as exempt. So to claim credit, they will follow subsection 2. But they have been given one more option. One more option has been given. So for the bank, financial institution and NBFC, they can either follow subsection 2 or subsection 4 is telling for these three special suppliers, whatever input tax you have paid, irrespective of for what purpose you use it, claim only 50% credit. Now, on your inward supply, you have paid 1 lakh input tax. I am not asking you for what purpose you are using it. Whether for taxable supply, exempt supply, I am not bothered. Claim 50% of it. That is 50,000 credit you claim. Flat. And remaining 50% will lapse. That's all. This is straightforward option given under subsection 4. If the bank or NBFC or financial institution ignore this or reject this option, what they have to do? They have to follow subsection 2. That is, they need to identify which inward supply they are using for what. If they are using partly, then whatever is attributable to taxable supplies only, they can claim the credit. Yeah. So that might be difficult for them because they provide various types of services. Few of them are exempt, few of them are taxable. So it is difficult for them to identify, okay, which supply I am using for what. That is why they have been given option under subsection 4. So what is it? Come on, guys. A banking company or a financial institution, including a non-banking financial company, engaged in supplying services by way of accepting deposits, extending loans, or advances, shall have option to either comply with the provisions of subsection, that is, they can either follow subsection 2, whatever we have already discussed, or avail every month an amount equal to 50% of eligible input tax credit on input capital goods and input services in that month, and the rest shall lapse. So if you are following subsection 4, straight away, whatever input tax you have paid, claim 50% credit of it. Don't prove me for what purpose you are using it. Straight away claim 50% credit, remaining 50% lapse. Okay. Provided that the option once exercised shall not be withdrawn during the remaining part of the financial year. That is, the bank or financial institution has two options. They can either follow subsection 2 or the option given under subsection 4. But once you follow any one option, throughout the year, you have to follow the same thing. Sir, can I change it in the next year? Yes, next year you can change it. But again, in the next year, throughout the year, you have to follow the same policy or same option. Clear? It's not like, okay, 1 month you will follow this, the other month you will follow the other one. You cannot do that. Whatever option you choose, you make sure that you will follow the same thing throughout the year. Clear, guys? Just so. Next, provided further that the restriction of 50% shall not apply to a tax paid on supplies made by one registered person to another registered person having same permanent account number. What are they trying to tell here? Now assume SBI. SBI Bangalore branch, which is registered in Karnataka, is providing some services to SBI branch in Tamil Nadu. So they are both are distinct persons, taxable. Now on this, the Tamil Nadu branch has paid some tax, input tax. Now for them also 50% restriction is applicable? No. So if any tax is paid on the inward supply which is taken from distinct person, which is registered under the same PAN, 50% restriction is not applicable. Even though if they have opted for subsection 4 also, still in case of inward supply which is taken from distinct person who is registered under the same PAN, 50% limit is not applicable. Even though if they have opted for subsection 4 also. Clear? That is 50% limit is only when the inward supply is from others, not from distinct persons. Is that clear? Yes, sir. Next. And please be careful with this. I have told you already. The services provided by way of extending loans and advances for which in return interest or discount is charged is actually exempt under GST as per section 11. Clear? And this subsection 4 option is given for the one who is providing these services, that is banking, financial institution or NBFC. And also if I have to link this point to somewhere else, guys, please be careful. This services which is exempt, that is extending loans and advances, it is exempt under GST. But while calculating the aggregate turnover as per section 10, that is composition scheme, we exclude this. We exclude this. Agree, as per explanation 1 as well as explanation 2. As per both the explanation, we exclude this. Agree? This one services which is exempt. All other things which is exempt is included in the aggregate turnover except this one. Clear? Yes, sir. Shalom. We'll continue. Input tax credit is available only on those goods and services used for business. Exports and supplies to SEZ fall under the category of zero rated supply, so it is a taxable thing. ITC is available on zero rated supplies and taxable supply, but not on exempt supply. Exempt supply includes, we have all seen, nil rated supply or non-taxable supply. And here and all, for general, what is exempt supply as per section 247, that is only applicable. Only for subsection 2, where it is partly part. Only then whatever is told in subsection 3 is applicable. Whereas everywhere else, whatever exempt supply is given in section 2 clause 47, the same thing remains same. Means same thing will be applicable. Clear, guys? Chalo, one illustration I have given. Input X is used to produce and supply output Y, which is exempt. Whether ITC is available? No, because your outward supply is exempt. No, ITC is not available on input X because it was used for exempt supply. In the above case, if the output Y is exported or supplied to SEZ unit, so it is a zero rated. ITC is available on input X as the outward supply is zero rated supply. Clear? I have also covered already what is zero rated supply, what is exempt supply, nil rated supply and all I have already covered. And whether ITC is available or not also I have mentioned in that one table at the end of the chapter, guys. Hope you guys can recollect to that. Now, 17.5. This is the challenging thing. So, 17.5, subsection 17.5 tell, in the following cases, credit is not available. We call it as blocked credits. Okay. So, here some list is given. If there is any inward supply which is covered under section 17.5 on which input tax is paid, sorry, you cannot claim credit on it. You cannot claim credit on it. So this is a bit challenging, guys. So I have given number of examples then and there only so that you will have proper clarity. So come on, be attentive. Look here. Come on. Input tax credit shall not be available in respect of the following, namely motor vehicles for transportation of persons having approved seating capacity not more than 13. Not more than 13 means less than or equal to 13. If it is more than 13, available. See, simple, guys. Whenever it is not covered in this point, it is understood that, okay, if it is not covered here, credit is available provided other conditions are satisfied. Clear? Yes, sir. Persons, including the driver. So, less than or equal to 13, including driver, except when they are used for making the following taxable supplies. Namely, means if the motor vehicle is used for the following three purposes, credit is available. It is available. Okay. So when are those? Except in the following cases, credit is not available. Means in the following three cases, credit is available. So what is it? further supply of such motor vehicle. That is, I'm a dealer in motor vehicles. I have purchased motor vehicle not to use for myself, to further supply it. To further supply it. In that case, on my inward supply, when I have purchased motor vehicle, I have paid any tax. Can I claim the credit? Yes. Next, transportation of passengers. So please be careful. Here they are told transportation of persons for whom credit is not available. But if motor vehicle is purchased on which the tax is paid, but that motor vehicle is used for the transportation of passengers, in that case, credit is available. That means, so assume there is a cab company which has purchased some cars or cabs, motor vehicle whose seating capacity is less than 13. So they are using the cabs or car for the purpose of transportation of passenger. Can they claim the credit? Yes, they can claim the credit. Okay. Next. So then when actually they cannot claim the credit, for example, Infosys has purchased 10 car. Why? For the transportation of their employees. Or else TCS company has purchased Mercedes-Benz car for the transportation of Chandrasekharan, who is the in charge of Tata Group now. So if they have purchased any car for the transportation of the employees are not passengers. So in that case, is credit available? No, credit is not available. Now Infosys example I told. Infosys company has purchased 10 cab. Why? To provide some cab facility, that is pick up and drop facilities to their employees. So in that case, will the credit be available for Infosys company on the purchase of car? No, because passenger is different, employees is different, guys. Please be very careful. Clear? So who is covered under this second point is only that transportation companies who provide transportation services to the passengers. Next, third one, imparting training on driving such motor vehicles. So imparting training means this driving schools and all is there. Okay. So Maruti driving school, A driving school, Sunshine driving school. So those people have purchased the car. Why? To use it in the driving school. In that case, can they claim the credit on the purchase of motor vehicles? Yes, they can claim it. Clear? So if I just summarize this, please be very careful. Motor vehicle used for the transportation of person is only covered. So if there is any motor vehicle which is used for the transportation of goods, is it credit is blocked? No, sir. Credit can be claimed, provided other conditions are satisfied. And wherever we are telling credit is available or credit can be claimed, it should be understood that only if you satisfy all the conditions, like 16 conditions, whatever conditions are given under section 16, 1, 2, 3, 4, all those things has to be satisfied. Okay. So if any motor vehicle is used for transportation of goods, credit is available. Okay. The seating capacity not more than 13. Sir, what if the seating capacity is more than 13? For example, Infosys has purchased a bus for what? Transportation of employees. Seating capacity is more than 13. Can they claim the credit? Yes, they can claim the credit. Why? Seating capacity is more than 13. So please be very careful. Only when the item is covered under the given situation, only then credit will be blocked. Clear? Hope it is clear. Examples I have given here. Look here. So please be careful in this point. 1, 2, 3, whatever is given, credit is available, because you can see, except when they are used in the following cases, credit is available. So except means in the following cases, credit is available. Oh, examples. ITC on car purchased by a manufacturing company for official use of its employees is blocked. Why? Because car is used. Car seating capacity is less than 13. Okay. Is used for what? Transportation of persons. And that persons is not passengers. They are employees. Credit is blocked. Okay. Next one. ITC on cars purchased by a car dealer for sale to a customer is allowed. Why? Because it is covered in this point. Further supply. Car dealer has purchased the car. What? Why? For further supply. So credit is available. Third one. ITC on car purchased by a company engaged in renting out cars for transportation of passengers is allowed. So there is a cab company which has purchased a motor car for what? For providing or for renting it to the passengers. In that case, is the credit available? Yes. Why? Because it is covered in this point. Okay, sir. Next. ITC on cars purchased by a car driving school is allowed. Why? It is covered in this point. Next, ITC on bus where seating capacity is 24, more than 13, purchased by a company for transportation of its employees. Infosys example I gave, for their residence to office and back is allowed. Why? Because it is not covered in this block list. Agree? Yes, sir. Next, ITC on the truck purchased by a company for the transportation of finished goods is allowed. Why? Because clause A is blocking only motor vehicle which is used for transportation of person, not the goods. Is that clear, guys? Hope it's clear for you. Please be careful with it. Exactly understand when credit is available or not available. Clear? I repeat this. Please pay attention. If a motor vehicle which is used for the transportation of persons where the seating capacity is less than or equal to 13 persons, then credit is not available. But if it is used for the following purposes, credit is available. That is transportation of passengers, or if it is for further supply of same car, or if it is for driving school. In these three cases, credit is available, guys. Clear? So this is what is given in clause A. Then whatever is given in clause A is also something related to that only, but the item is different. Vessels and aircraft, except when they are used for. Now your purchase vessels means not the one which you will use it in your home. Vessels means ship. So vessels and aircraft. Now you have purchased in vessels or aircraft on which you have paid input tax. Can you claim the credit of it? No. That is what they are telling. But in the following cases, credit can be claimed. So in the following cases, credit is available. Credit available. So which are those? One by one. For making the following taxable supplies, namely further supply of such vessel or aircraft. I have purchased vessel and aircraft for what? To further supply it. So I am a dealer in this, big person. Because if you are a dealer in vessel and aircraft, then you are such a big person. Next, transportation of passengers, imparting training on navigating such vessels, or imparting training on flying such aircraft, or for transportation of goods. For transportation of goods, if it is used also, credit is available, guys. Very similar to whatever is covered in this point. Agree? So when credit is available is given here, na? So here also almost same points only. Okay, but here goods is given separately. So if vessels and aircraft is used for the transportation of goods, always credit is available, guys. Clear? Now, let me give an example. Mukesh Ambani has purchased an aircraft in Reliance Industries name. So it is purchased by RIL, Reliance Industries Limited. They have paid tax on it. And why it is used is for the transportation of Mukesh Ambani and his family members. Or assume the top level employees of the company. In that case, is credit available? No, sorry, not available. Clear? Yes, sir. Now, Air India. Air India has purchased a flight. Why? To use it for the transportation of passengers. So in that case, can they claim the credit? Yes, because they are using it for providing transportation services for whom? Passengers. Can they claim the credit? Yes, they can claim it. They can claim it. Clear? Fine. Example. Now some cargo. For example, cargo also. Now, Adani. Let me take Adani. Adani has purchased a ship for transportation of goods. Can he claim the credit of it? Yes. He can claim the credit of it. Same way. Now, Adani has purchased a ship for why? For the transportation of only his and his family members or his employees of the company. Can he claim the credit? No, he cannot claim. Clear? Yes. Sure. Examples. ITC on aircraft purchased by a manufacturing company for its official use of its CEO is blocked because he is an employee. So he's not a passenger. If it is for a passenger, yes, allowed. But here CEO or employees not allowed. Thank you. ITC on aircraft purchased by an aviation school providing training on flying aircraft is allowed. So whoever is giving some pilot training and all, if they have purchased any flight, they can claim the credit because it is covered here. Training. Okay, for motor vehicle driving school, we call it as here and all imparting training, some standard words. Okay, yes, sir. So now you have understood clause A and AA talks about if you have purchased motor vehicle or if you have purchased vessels or aircraft, when you cannot claim credit or when you can claim credit, it is clearly given in clause A and AA. Okay. For the same three things, that is motor vehicle, vessels and aircraft, you have purchased it and you have taken some services, that is general insurance or servicing like repairs and all, or repairs and maintenance, any service including repairs and maintenance. So you have taken these three types of services, that is general insurance, because normally when you have taken motor vehicle or vessels and all, you will insure it. So you would have taken some general insurance services. Okay. Or whenever required, you would have done some servicing or repair work on it. So again, that is an inward supply for it. You would have paid tax on that inward supply. All three are in the nature of services. So you have paid tax on that inward services. Can I claim the credit is the question. Now, what are they trying to tell in clause BB is they're trying to connect it to A and AA. When you have purchased a motor vehicle, when you have purchased the vessel or aircraft, on that purchase, if you can claim the credit. When you can claim credit, when you are using for a particular purpose, whatever I have marked it in flower bracket here. If you are using it for this purposes, you can claim the credit. Okay. You have claimed the credit when you have purchased the motor vehicle or aircraft or ship. In that case, even if you have paid tax on these three services, you can claim the credit. You can claim the credit. They are telling it. Clear? Now, other scenario. Sir, when I have purchased the motor vehicle or vessels and aircraft, the credit was blocked because I used it for the transportation of my employees or something for which credit was not available. Okay. So on purchase of motor vehicle or ship or aircraft, credit was blocked. In that case, on the same thing, if you are taking general insurance, servicing and repairs and maintenance services, even credit on that also is blocked. Okay. So when you have purchased, if the credit is blocked for under A and AA, then for the services, for these three services, even the credit is blocked. Yeah. Yes. So BB is somewhere connected to A and AA, guys. Services of general insurance, servicing, repairs and maintenance, insofar as they relate to motor vehicles, vessels or aircraft, referred to in clause A or AA, provided that input tax credit is in respect of such services shall available. So normally on these three services, credit is not available, but in the following cases, credit is available. When is it? Where the motor vehicle, vessels or aircraft referred to in clause A or AA are used for the purposes specified therein. That is, if the motor vehicle is used for these purposes, these three purposes, then on motor vehicle you can claim credit now. Yes. And on these three services also you can claim credit. Okay, sir. Or else, if vessels or aircraft are used for these purposes, you can claim the credit on whatever tax you have paid on the purchase of vessel and aircraft, right? Yes, sir, I can claim it. In that case, whatever tax you have paid on those three services also, you can claim credit. That is what they are trying to tell. So BB, they are connected to A and AA. Okay. Second point is different. Where received by a taxable person engaged, means the three services are received by a person who are engaged in the manufacture of motor vehicle, vessels or aircraft. So if you are a manufacturer of these three things, then if you are receiving any of these three input services, whatever tax you have paid on it, you can claim the credit. You can claim the credit. Okay. For example, let me give an example. I am Tata Motors. So Tata Motors is manufacturing motor vehicles. Okay. So now they are taken some general insurance services or some repairs and maintenance services from others, which is an inward supply for Tata Motors. Can they claim the credit of tax whatever they have paid on this inward supply services? Yes, because they are the manufacturers. Clear? Next, in the supply of general insurance services in respect of such motor vehicles, vessels or aircraft insured by him. This is a scenario of reinsurance. Clear? Especially when the amount of risk is more, the insurance company will reinsure it with others. For example, assume I have taken a general insurance. I have taken a general insurance from ICICI. So for 1 crore. For 1 crore on my ship. I have a ship. On my ship, I have taken a general insurance of 1 crore. Now ICICI thought the risk involved in this is very huge. Let me reinsure this with HDFC insurance. So they have reinsured it with HDFC general insurance. In that case, ICICI is receiving some inward service from whom? HDFC general insurance. So can they claim the credit? Yes, they can claim. But can I claim the credit? Now, I have received the insurance services from ICICI general insurance. So for me, I need to check for what purpose I am using the ship. Accordingly, I will be deciding whether credit is available or not. Clear? Yes, sir. So in the following two cases, credit is available, guys. Credit available. So actually in my revision notes, I have given it very well by using different colors. I have highlighted in green color wherever credit is available. Wherever credit is not available, I have highlighted in red color so that it will be easy for you guys to understand, because here they are told credit is not available except in the following cases. Credit is available except in the following cases. So something like that. So it might be confusing to the student. That is why I am also drawing the flower bracket and telling where credit is available. Except in this scenarios, in other cases, credit is blocked, guys. Credit is blocked. Is that clear? Shall I proceed further? Examples on this clause. ITC on general insurance taken on a car used by the employees of a manufacturing company for official purposes is blocked. ITC on general insurance taken on a car used by employees of a manufacturing company. Manufacturing, not manufacturing of car, some other manufacturing. Okay, so it is used for the employees. So in that case, credit is blocked. So even for motor vehicle also credit is blocked. Even for the insurance you are taking on that motor vehicle also is blocked. So please be careful. They are not the manufacturing of car. Their business is manufacturing company. They are doing some other manufacturing. If they are car manufacturer, yes, they can claim the credit for insurance. Okay. Next, ITC on maintenance and repair services availed by the company for a truck used for transportation is used finished goods. See, if a truck is used for what? Transportation of goods. So on the truck, credit is available. Yes, sir. So in that case, whatever repairs and maintenance services you take on the truck, also credit is available. Clear? Next, ITC on general insurance services taken on cars manufactured by whom? Car manufacturing company is allowed. You are a manufacturer of car. So in that case, whatever three services you are taking as an inward supply, credit is available. Clear, guys? Yes. Now coming to clause B. So A, AA and BB connected and related. So you guys can study it together as it is interconnected. Next, B is different. The following supply of goods or services are both. Means for the following goods or services, credit is not available, guys. The following supply of goods or services are both. That is food and beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, leasing, renting or hiring of motor vehicles, vessels or aircraft referred to in clause or clause AA, except when used for the purposes specified therein, life insurance and health insurance. So for the following input services or inward inputs, the credit is not available, guys. But there is one proviso here. Provided that the input tax credit in respect of such goods or services or both shall be available where an inward supply of such goods or services or both used by a registered person for making an outward taxable supply of the same category of the goods or services or both are as an element of taxable composite supply or mixed supply. Sir, what are they trying to tell? Look, yeah, interesting actually. So for these items, credits are not available, guys. Not available. Okay, but what are they trying to tell is, if you are taking any of this as an inward supply, why? To provide same category of outward supply, then on your inward supply credit is available. Let me just give an example now. Assume I am a caterer. Okay, so I am a caterer. I received a catering contract from Infosys company. Okay, let me. So I am a catering company. I received a catering contract from Infosys company to supply the food on their annual general meeting. So they are conducting their annual general meeting. They want me to supply food at their annual general meeting. Okay, sir. Now, whatever services I am giving to Infosys Limited is input services for them. Can they claim the credit? No, sir. Food and beverages have been supplied, or catering contract has been supplied to Infosys Limited. They are not providing any same category of outward supply. So for them, credit is not available. So 17.5 tell credit is ITC not available. Okay, but now I am the caterer. Now Infosys has given the list of the food items which has to be supplied. Now sweets, I am not doing sweets. So I purchase the sweets. From where? A to B. Adyar Anand Bhavan. Okay, so I purchased sweets from Adyar Anand Bhavan. Why? Not to consume. To further supply it to whom? Infosys company. Okay, only sweet. All other things I am only doing. I am only cooking it. So only some sweets and snacks I am purchasing it from A to B. In that case, for CC, that is catering company, it is an inward supply. This is an inward supply. Yes, sir. Can they claim the ITC? Yes, they can claim the ITC. Why? They are taking inward supply. Why? To provide same category of outward supply. Or as a part of it. Because I'm not only supplying sweets and snacks. Along with that, I am also supplying other items. So it is a part of my supply. It is part of my composite or mixed supply. I am charging 500 rupees per foot for Infosys company, which includes sweets and snacks. I am purchasing sweets and snacks from ATP, which is inward supply for me. I am not consuming it. I am further supplying it to Infosys company. So on that case, can I claim the ITC on whatever I have purchased from Adyar? Yes, you can claim it. Because I am supplying the same category. Whatever sweets I have purchased, as it is, I am supplying it to Infosys. Nice. Good example. Chalo. Even if it is a part of composite or mixed supply, because here it is actually a part of composite or mixed supply only, because I am supplying one food. I am charging for one food 500 rupees, in which sweet and snacks are a part of it. Clear, guys? So please be careful. If the following inward supplies have been taken, why? Not for me to supply same category, of outward supply. Now, sir, Infosys also took inward supply. For Infosys, catering is an inward supply. They are also providing outward supply. Now, sir, software services, not same category, na? They are providing outward supply, but of different category, not same catering services they are providing. Agree? Yes, sir. Now, let me take one more example. Actually, this is interesting. Now, let me take TCS. TCS has purchased some food and snacks from some, from whom shall I take different name? Asha Sweets. Okay, there is someone called Asha Sweets in Bangalore who is famous. Asha Sweets. So TCS Limited has purchased food and snacks from Asha Sweets. So inward supply for TCS. Why? Not to consume, to sell them in their canteen. TCS Limited have canteen for their employees. So employees can go and purchase the items in their canteen. So now TCS is providing outward supply. of what? Same category, food and snacks. So whatever they have purchased, selling it as it is to whom? To their employees. They are selling it where? In their canteen. Agree? In that case, can TCS Limited claim the credit? Yes. Whatever they are providing software service, that is different. Here they have purchased food and snacks as an inward supply. Why? To sell it in their canteen. Can they claim the credit of it? Yes, they can claim it. They can claim it. Okay, this is one example. Next, let me change the scenario. Now TCS has purchased the food and snacks items from Asha Sweets, which is an inward supply for them. Why? To give it or to distribute it to their employees on family day. To give it to their employees on family day. So they are not selling it to their employees. They are giving it free of cost. So their employees are consuming it or their family members are consuming it in the family day. On that case, can they claim the credit? No, sorry. Credit cannot be claimed because there is no further supply there. Yeah. Yes, sir. Interesting example. Where were we? Yeah. Okay, next, second one here. Membership of a club, health and fitness center. So if any person has paid GST on taking membership of any club, health and fitness center, then credit cannot be claimed, guys. Okay, now Infosys company, assume they have taken the membership of Gold Gym. Whenever the employees of Infosys want, they can go and work out in Gold Gym to build their body, not career, body. So in that case, can Infosys claim the credit of whatever tax they have paid to obtain the membership? No. Thank you. Next, travel benefits extended to employees on the vacations such as leave or home travel concession. Now, some companies, they give for top level, not for everyone. So for top level employees and all, they give some travel benefits. They can travel to any place with their family. Company will pay for it. So company has paid for travel expenses incurred by the employees and their family members. So on that, obviously they would have paid some GST also. Agree? Can the company claim the ITC of it? No, they cannot claim ITC. But provided that input tax credit in respect of such goods or services or both shall be available where it is obligatory for the employer to provide the same to its employees under any law for the time being in force. Means whatever we have discussed from point 1, 2 and 3. If any of this is mandatory for the employer to provide it for the employee under any law, then employer can claim the ITC of it. For example, assume under a labor law, it is mandatory for every employer to give lunch to their employees in the afternoon. In that case, to purchase that lunch, whatever tax the company or the employer has paid, they can claim the credit. That is what they are trying to tell. So if any of these services are provided to the employees by the employer, and if it is obligatory to the employer under any law like means labor law, employees law, whatever, there are many other laws, okay, provident fund law, that this one. So under any law, if it is obligatory for the employer to provide this services or goods to the employees, then credit is available for the employer. If not, credit is not available. Clear? Yes, sir. Next, examples. So on this, I have given various examples. Let us go through one by one. A manufacturing company purchases food items for being served to its customers free of cost. ITC on such goods is blocked. Okay, because it is being served to its customers. So there is no further supply. So credit is blocked. It has been given free of cost. Agree, na? So that is why. Okay. Next, AB and Co, a caterer of Amritsar, has been awarded a contract for catering in a marriage to be held at Ludhiana. The firm has given a contract for supply of snacks to be served in the marriage to CD and Sons. So there is some subcontract. A local caterer of Ludhiana. ITC on such outdoor catering services inward supply availed by AB and company is allowed. So AB company is a catering company. They have subcontracted to CD and Sons to purchase snacks. So on purchase of snacks, whatever GST has been paid by AB and Co, they can claim the credit because They are providing further supply of same category of they're further supplying same category of goods. Okay. Next, outdoor catering service is availed by a company to run a free canteen in its factory. The Factories Act 1948 requires the company to set up a canteen in its factory. So ITC on such outdoor catering is allowed. Why? Because it is obligatory for the employer under which law? Factories Act to provide it. So in that case, it is available. If it was not obligatory for the employer under Factories Act, then credit was not available because it is given free of cost to the employees. In that case, there is no further supply. Agree? Say of same category. So that is why the credit will not be available if it was not obligatory. Then fourth example, the managing director of a company has taken the membership of a club, the fees for which is paid by the company. ITC on such services blocked. Yeah. Next, the company avails services of a travel agency for organizing a free vacation for its top performing employees. ITC on such services is also blocked. If by chance, if any of this is obligatory for the employer to provide it, then it might be allowed. That is, credit might be allowed if all other section 16 conditions are satisfied. Okay, we are going to the next point, guys. C. So C for works contract services. Contract. C for contract. Works contract services. When supplied for construction of an immobile property other than plant and machinery, except where it is an input service for further supply of works contract services. So what are they trying to tell? I have given the explanation. See, actually in class C only this much is given. For every class I have given the explanation, guys, because see, without explanation, without example, clarity will not be there. Even when I studied this for the first time, when I was writing my CA finals, because in my inter I studied old indirect tax, which was service tax, VAT and all. So when I came to final, I was studying GST. So all this I studied by my own. So in that case, it was very confusing for me because only this much is given in the section. That's all. Agree. So there won't be much clarity there. Even other previous classes also. Okay, I have given a lot of examples now in my material so that you will have proper clarity, guys. Okay, please make use of this. Do understand how it is given. Chalo, let me read this. Works contract services when supplied for construction of immobile property. That means I have taken an works contract services. Why? For the construction of my immobile property. That is nothing but building. Okay, sir. Other than plant and machinery. So plant and machinery, it is not covered here. That means for plant and machinery, credit is available, guys. Okay. Except where it is an input service for further supply of works contract service. So they are trying to tell like this. Please be careful. I have taken a works contract services for the construction of an immobile property. That is building. Irrespective of for what purpose you use that immobile property, that doesn't matter. Credit is not available. Credit is not available. But for plant and machinery, credit is available. Okay, sir. Next scenario, different scenario. Now, I am Shobha Developers. I have received a contract to construct a immobile property. That is a flat. Okay. I have subcontracted this to SG Construction. Shobha Developers is not doing it. They have subcontracted it to SG Construction. So now SG Construction is giving services to Shobha Developers. Why? They're doing the construction services to the other person. So in that case, Shobha Construction is receiving the inward works contract services to provide same category of services to its client. Agree? In that case, can Shobha Developers gain the credit? Yes, because they are receiving the inward supply of works contract to provide same category of outward supply. Can they claim the credit? Yes. So this is an example for subcontracting of works contract, guys. Chalo. ITC on the works contract services for construction of immobile property is available only in the following cases. So in the following three cases, credit is available. Which are those? So this is what, see, clause C is whatever I have already marked it here, only that much. Whatever here in the next paragraph I have given is just for an explanation sake. It is not given in the law like this. Okay, what is that? when the works contract service is availed by the works contractor for being used in providing works contract services. So you can just write there, subcontracting. I am receiving works contract service. Why? To give works contract services to my client. In that case, I can claim the credit. Okay. For construction of plant and machinery, always credit is available. In this case, ITC is allowed to all the recipients, irrespective of their line of business. Means what business they are doing, it is not a problem. If you are receiving any works contract services for the construction of plant and machinery, you can claim the credit, irrespective of what business you are doing. Whether you are doing construction business or software business, doesn't matter for us. Third one, when the value of works contract services is not capitalized, that means whatever payment you have made for works contract services, if you have treated it as a revenue expenditure for you, then you can claim a credit for it. Okay, means only for capital expenditure, credit is blocked. And in maximum scenarios, works contract services, whatever you would have capitalized it until and unless it is a repairs, which is of revenue nature. Clear, guys? So if you are not capitalized it, whatever works contract services cost you have incurred, if you have treated it as a revenue expenditure, credit can be claimed. In this case, ITC is allowed to all the recipients irrespective of their line of business, provided it is a revenue expenditure. Okay, if it is a capital expenditure, always credit is blocked. Examples. ITC on works contract services availed by a software company for construction of its office is blocked because software company is taking works contract services for themselves. Whether it is for their office or building or a residential building, doesn't matter. Credit is blocked. Okay, sir. Next, second one, subcontracting example. CD & Co, a works contractor of Noida, has been awarded a contract for construction of a commercial complex in Lucknow. So CD & Co has received a contract to construct a complex in Lucknow. The firm avails services of EF & Co, a local works contractor of Lucknow, for construction of complex. So now CD & Co is receiving some input services in the nature of works contract services. Now, can CD & Co claim the credit? Yes. ITC on such works contract services availed by CD & Co is allowed. Clear? And now, a person has given the contract to CD & Co. Now, CD & Co is giving services to him. Okay, can that person claim the credit? No. Because he is not providing the same category of outward supply. Agree? He cannot claim the credit. Next, third one. ITC on the works contract service availed by an automobile company for construction of a foundation on which a machinery to be used in the production process is to be mounted is allowed, because they are taking works contract services for what purpose? For plant and machinery. Credit is allowed. Fourth one, a consulting firm has availed services of a works contractor for repair of its office building. So repairs is also considered as works contract service only. The company has booked such expenditure in profit and loss account. What are they trying to signify here? They have treated it as revenue expenditure, because only revenue expenditure will be booked in P&L account or statement of profit and loss. Agree? So they are trying to give an hint for you that they have treated it as revenue expenditure. So in case of revenue expenditure, is credit available? Yes, is allowed. Interesting, na? So please be careful. When the credit is blocked is only when you have taken a works contract services which is of capital nature, and it is not for plant and machinery, and it is not to provide the same category of outward supply. Only then you can claim the credit. Fine. Let us go to clause D. So clause C talks about input service. What is that input service? Works contract services for the construction of immovable property. Clause D is talking about different thing. Goods or services are both received by a taxable person for construction of immovable property other than plant and machinery on his own account, including when such goods or services are both are used in the course or furtherance of business. Sir, what is it? Now, I am constructing an immovable property for myself. On my own account means for myself. Okay. I am constructing an immovable property, whether it is office building, residential building, doesn't matter. I am constructing an immovable property for myself, whether it is office or residential building, no problem. And I have purchased some goods and services, guys, like cement, steel, bricks and all I have purchased, on which I have paid input tax. Now, can I claim credit of it? No. When you are purchasing any goods or services for the construction of immovable property on your own account, you cannot claim credit. You cannot claim credit. But if it is for plant and machinery, you can claim it. But now let me change the scenario. Sir, now I am monthly developers. Monthly developers. I am constructing an apartment. Okay, not apartment. Let me take. Now I am constructing an office building for Infosys. Monthly developers is constructing an office building to Infosys Limited. Okay. Now monthly developers have purchased some goods and services for the construction of building, like cement, steel, whatever they want. Okay, sand and all, on which monthly developers has paid GST. Can they claim the credit? Yes, they can claim. Why? Because they are not constructing this building on their own account. It is not for them. It is for his client. Is that clear? So please be very careful. In case of construction of immovable property on his own account, if any goods or services is purchased for construction, credit is blocked, except for plant and machinery. Clear? Yes, sir. Next, ITC on the goods and or services used in the construction of immovable property is available in the following cases. Okay, only this much is given in clause D. Whatever is given later is an explanation. Okay, so credit is available in the following situations. When is it, guys? For the construction of plant and machinery, always credit is available, whether it is on your own account or not, doesn't matter. When the value of goods or services is not capitalized, means whatever goods and services you have purchased, if you have treated it as a revenue expenditure, you can claim a credit of it. Okay. Next, when the construction is not on own account. I gave a second example, monthly developers. Na? So in that case, construction is not for me. It is for Infosys Limited, who is my client. Can I claim the credit? Yes. Monthly developers can claim the credit. Now, in the same example, assume Infosys itself is constructing a building for them. Okay, they have not taken the help of anyone. Infosys itself is constructing the building for themselves. In that case, whatever goods and services they have purchased, if they have treated it as a capital expenditure, credit is not available because they are constructing it on their own account for themselves. Examples. A company buys cement, tiles, etc., which is a raw material for construction, and avails the services of architect for construction of its office building. Means own account. Yes, sir. ITC on such goods or services is blocked because they are constructing the building for themselves. Okay. MN and Constructions procures cement, paint, iron rods and services, which is the raw materials for them, of and services of architects and interior designers for construction of commercial complex for one of its clients. So it is not for themselves, it is for clients. So can MN and Construction claim the credit of whatever tax they have paid on these items? Yes, they can claim it. ITC on such goods and services is allowed to MN and Co. because they are not constructing for themselves but for their client. Next item. A company buys cement, tiles, etc. and avails the services of architect for renovation of its office building. The company has booked such expenditure in its profit and loss account. Sir, how is it possible? It is completely an accounting topic, so I am not bothered. Sir, how are they treating it? Because it is a capital item now. Fine. If they are booking it in profit and loss account, it means they are treating it as a revenue expenditure. Can they claim the credit? Yes, sir. Credit is allowed. Credit is allowed. Which expenditure should be treated as capital, which expenditure should be treated as revenue is purely an accounting topic. Agree, and you guys would be an expert in that. So I am not commenting it. Here they are just trying to tell if it is treated only as capital expenditure, credit is blocked. If it is treated as revenue expenditure, credit is available. For both works contract service also same thing. Whatever is given in C, here for input and input services which is used for construction service is also same rule with respect to expenditure. Yeah. Explanation. For the purposes of clause C and D, the expression construction includes reconstruction, renovation, additions or alterations or repairs to the extent of capitalization to the said immovable property. So both clause C and D talks about construction. So they're telling construction includes repairs, renovation, construction or anything which is capitalized. Which is capitalized means specifically this C and D covers only capital expenditure of any construction work, guys. If it is revenue, then it is not blocked. Credit is not blocked. Yeah, some more items are left. Few more, only small items. We'll just close it. E. Goods or services are both on which tax has been paid under section 10 composition scheme. We already know the person who has opted for composition scheme, he cannot claim ITC, and the person who has purchased from him also cannot claim ITC. Clear? So totally in composition scheme, ITC chain is blocked. You cannot claim ITC. Clear? Yes, sir. Next. Goods or services are both received by a non-resident taxable person except on goods imported by him. Non-resident taxable person is one of the special category person under GST. There are two persons there actually. Casual taxable person and non-resident taxable person, and they have been defined under the GST. We'll be seeing that in registration chapter, which is the next chapter for us. I will be explaining there who is exactly NRTP and CTP. That is non-resident taxable person and casual taxable person. Now, if non-resident taxable person has paid any tax on his inward supply, he cannot claim credit. But if he has paid tax on the goods imported by him, so on the goods imported by him, he would have paid IGST. Can he claim credit on it? Yes, he can claim it. So in simple, they are trying to tell, if anything is purchased in India on which he has paid tax, he cannot claim the credit. He cannot claim the credit. And also, if he has imported any service on which he has paid IGST, on that also he cannot claim credit. Only he can claim credit on goods imported into India on which he has paid tax. Clear? Yes, sir. When I again go to that NRTP, when I am discussing registration chapter, I will mention this point. You need not worry. Because as of now, you don't have clarity on who is he and the. So when I explain that, I will be mentioning this point also. Next one. Goods or services are both used for personal consumption. So they are very clearly told in section 16. Whatever inward supply you have taken, you should use it in your business or intended to be used in the business. If you are using your inward supply for personal purpose, no credit. They are giving one more clarity here. Okay. Yes, sir. Next. H. Goods lost, stolen, destroyed, written off or disposed of by way of gift or free samples. Now, your goods has been lost by way of stolen, destroyed, written off or disposed, whatever. So on your outward supply, there is no tax. Government is not getting any tax. So they told on your inward supply, please don't claim credit. Because government is not ready to lose both. Because on your outward supply, government will not be getting any tax because you have lost the goods. Goods are stolen, destroyed by fire. You are giving it free of cost to the people. In that case, on your outward supply, you are not paying tax. So please don't claim ITC. That is what the department is telling. But however, where the activity of distribution of gift or free samples falls within the scope of supply on account of provisions of contained in section schedule 1 of CGST Act, the supplier would be eligible to avail ITC. So if any of this, like goods stolen or any of these items is falling in para 1, 2, 3, 4, especially para 1 of schedule 1, then that is treated as supply even if there is no consideration on your outward supply. Yes, sir. So in that case, on your outward supply, you are supposed to pay tax. Yes, sir. In that case, you can claim ITC. Okay. The best example is para 1 only. So para 1 will clearly tell if there is any supply of or permanent disposal of business assets without consideration on which ITC is claimed, it is a supply. Agree? So they are trying to connect it here. So assume there is a permanent disposal of business assets on which you have claimed ITC. So ITC is claimed. So in that case, it is a supply there. Agree? So if ITC is not claimed, then it is not a supply as per para 1. Agree? So they are trying to tell, okay, for outward supply, even without consideration, it is a supply as per schedule 1 means, okay, you can claim the ITC. You would have already claimed it. Okay, or else if you have not claimed, you will be claiming it in the next period. Like that. Yeah. So if your outward supply is a supply, even if it is without consideration as per schedule 1, then on your inward supply, you can claim the credit. If not, you cannot claim the credit. That is what the clarity given here. Further, it is clarified that ITC shall be available to the supplier for the input services and capital goods used in relation to supply of goods or services or both as part of buy one get one free offer and buy more save more free offers. Sorry, buy more or save more. We will discuss about this. I have given some circular explanation here. There I will explain in detail about this. I think somewhere here. Yeah, these parts. I will be explaining it there. Let me first finish the other things. Last one. I. Any tax paid in accordance with the provisions of section 74, 129 and 130. We call this as recovery sections. That is, a person was liable to pay tax, but he has not paid. So proper officer has identified, he has sent a notice to you, then in response to that you have paid. So in that case, the proper officer has recovered the tax from you. In that case, you cannot claim the input tax credit of it. Yeah. Explanation. Plant and machinery. So for plant and machinery, if you have taken any works contract services, credit is available. For construction of plant and machinery, if you have purchased any goods or services, also credit is available. What is plant and machinery? Plant and machinery means apparatus, equipment and machinery fixed to the earth. Fixed to the earth means even that is immovable actually. By foundation or structural support that are used for making outward supply of goods or services or both, and includes such foundation and structural supports. See, plant and machinery, what they are trying to tell here is something which is installed or fixed to the earth, especially the one which is used for manufacturing process and all guys, which will be attached to the land, okay, which will be fixed to the land, which is immovable in that case. Okay, yes. So they are talking about that here, but it excludes the following three. So the following three is not a plant and machinery. Land, building or any other civil structure, they are not plant and machinery. Then telecommunication towers, even they will be attached to the land, but they are not plant and machinery. And the last one, pipelines laid outside the factory premises. In that case, these three are not a plant and machinery, guys. An illustration is given here. ABC Limited is engaged in the manufacturing of electrical appliances, and following details are available. Advise ITC eligibility of the following. What are those? One by one, let us see. Electrical transformers utilized in the manufacturing process. Can I claim the credit on this? Yes, it can be claimed. Let us see the answer. The ITC on electrical transformers would be fully available as these are used in the course or furtherance of business. Okay. Next. Trucks used for transportation of materials. So trucks used for the transportation of goods, credit is available. So the answer is the ITC on trucks used for transporting vehicles would be available as these are used in the course of business or furtherance of business. So transportation of goods, credit is not blocked. Next. Cakes and pastries for consumption within factory, credit is blocked as per section 17(5). ITC and food and beverages is blocked credit unless the inward supply are used to make taxable outward supplies in the same category, whereas the above is for consumption and hence blocked as per section 17(5), guys. As per section 17(5), blocked because it is used for consumption, not for the further supply of same category. Is that clear? Yes, sir. Now one more illustration. Mr. B procured stock worth 50 lakhs inclusive of GST, but these goods were lost to dacoity. However, he now wants to avail ITC as he has anyways paid the entire invoice value. Can he claim it? No, because goods have been lost. In that case, on that you will not be paying any tax on your outward supply. So input tax credit cannot be claimed on your inward supplies. ITC can only be availed if the goods or services so availed are used to make outward taxable supply, or if they are required during the course of business or furtherance of business. In this case, goods were lost and hence no ITC can be availed. No ITC can be availed, guys. Fine? Yes. With respect to some sales promotional schemes, clarity has been given by way of circular. Even for same type of discount, clarification was given even while calculating the value of supply as per section 15. Okay, that is whether the following discount should be reduced or not. I have explained it while discussing section 15 subsection 3, guys. There are two types of discount there under clause A and B. We have already discussed that clarifications. So here a circular has been released to tell whether credit is available on the following items or not. Chalo. Let us just finish this and close the class for now. ITC in the hands of the supplier in respect of sales promotional schemes. Circulars number 92/11 2019, GST dated 28th March 2019. You did not remember all this. Has clarified the entitlement of ITC in the hands of the supplier in respect of various sales promotional schemes as under. What are those? One by one. Samples and free gifts. So now a company has given a samples and free gifts. Obviously, they are not charging anything for it. So outward supply is 0. So in that case, on inward supply. So obviously, to purchase these items, the company would have paid something on their inward supply. Can they claim the credit of it? No. But if the outward supply, whatever they are giving free gift and sample, if it is a supply as per schedule 1, then on inward supply, they can claim the credit. Condition attached. Chalo. Let us see. Samples and free gifts. ITC shall not be available to the supplier on the input services and capital goods to the extent they are used in relation to the gifts or free samples distributed without any consideration. However, where the activity of distribution of gift or free samples falls within the scope of the supply on account of provisions contained in Schedule 1 of the said Act, the supplier would be eligible to avail the ITC. So, whatever samples and free gifts, it is without consideration. But if it is a supply as per Schedule 1, then you can claim the ITC on your inward supply. Yeah, there also they tell the same points. Only if ITC is claimed on your inward supply, then the outward supply, even without consideration, is a supply as per para 1. So, they have tried to connect the things. Next, buy one, get one free offer. Now, assume I am the supplier. I am supplying 1 + 1. Buy one, get one free. So obviously supplier has purchased this. He has purchased 2 items. So inward supply is 2 items. On both, he has paid, assume 20 rupees tax, 10 rupees each. Now, he has supplied this to the recipient on buy one, get one free offer. Now the question is, can he claim the credit on both things or only one? He can claim credit for both. That is full 20 rupees credit he can claim. Because here it is like 2 goods are supplied for one price of 1 goods. No problem. That is their pricing strategy, sales, promotional, whatever it is. So in that case, anyway consideration is there. Yes. So outward supply you are liable to pay tax. You are selling it for lower price, higher price, whatever it is. I don't care about it. So in that case, you can claim credit on your entire inward supply. Yeah. This is not an individual supply of free goods, but a case of 2 or more individual supplies where a single price is being charged for the entire supply. It can be at best be treated as supplying 2 goods for a price of 1. So it can be a composite supply or mixed supply also. So accordingly, as per section 8, you will decide the rate. Okay. Taxability of such supply will be dependent upon as to whether the supply is a composite supply or a mixed supply, and the rate of tax shall be determined as per the provisions of section 8, which we have already covered. ITC shall be available to the supplier for the input services and capital goods used in the relation to supply of goods or services or both as part of such offers. So you can claim full input tax credit on whatever inward supply you have got. It is not restricted only for one item. It is given for both. Next, discounts including buy more, save more offers. So I am giving discounts to my customer. If you buy more, more discounts, more than 5,000 this much, more than 10,000 this much, or else if you purchase more than 1 lakh units in a year, quantity discount, I am giving 10% discount. In that case, yeah, discounts offered by the suppliers to the customer, including staggered discount and a buy more save more scheme and post supply volume discounts established before or at the time of supply, shall be excluded to determine the value of supply, provided they satisfy the parameters laid down in section 15 subsection 3. Agree? Means you need to satisfy it. While calculating the value of supply, you can reduce it provided you satisfy the conditions given under section 15.3, including the reversal of ITC by the recipient of the supply as is attributable to the discount on the basis of document issued by the supplier. And here document is credit note. Clear, guys? See how this is how the things are connected, guys. So if you by chance, if you don't know what is section 15, what is discount and all, you will not be able to connect to these points. So that is why there are a lot of interconnections, even in the coming days also. Okay, I will be connecting the things wherever possible. So it is always good to know all the topics or all the provisions. Please don't skip anything. However, the supplier shall be entitled to avail the ITC for such inputs, input services and capital goods used in relation to supply of goods or services or both on such discounts. Now let me explain this. Now, a supplier is supplying the goods to the recipient at 10% discount, guys. At 10% discount. Okay, sir. Now supplier has purchased the same thing. Supplier has purchased the same thing from others and he has paid 10,000 tax on it. Input tax. He has paid 10,000 input tax on it. Now the question is, as the supplier has supplied the same goods to the recipient at 10% discount, can supplier claim, means can he claim full credit of input tax on his inward supply? Yes, he can claim it. Don't reduce 10% from this. Nothing like that is there. Sir, 10% you has to be reduced. Only remaining 9,000 credit will be claimed? No, nothing like that. Entire 10,000 credit will be claimed. By whom? This person. On his inward supply. Clear, guys? Yes. So discount and all will not impact ITC. Secondary discounts. There are the discounts which are not known at the time of supply or are offered after the supply is already over. Such discounts shall not be excluded while determining the value of supply because it was not agreed at the time of supply. So as per section 15.3b, it is the discount which is given after supply, but it was not agreed at the time of supply. So we will not reduce it while calculating the value. There is no impact on availability or otherwise of ITC in the hands of supplier. See, while calculating the value of supply, we will not reduce it. But to claim ITC, yes, whatever tax you have paid on your inward supply, irrespective of which discount you are giving, primary, secondary, third, whatever, you can claim ITC. You can claim ITC provided all other conditions are satisfied, guys. Yeah. So this is what the clarification given by way of circular. So we have covered 2 sections, guys. Only 2 sections we have covered in this 2 videos. Which are those? Section 16 in first video and section 17 in this video. And in detail, each and every bit we have covered along with lot of discussion about illustrations and examples, guys. Hope each and everything is clear for you. Please do study regularly, guys, and cover these sections before you start the next video. So do study these sections in detail and we will continue from section 18 and also do the problems on whatever we have discussed plus whatever we will discuss in the next class in the coming videos, guys. Until then, study well. Take care, guys. Bye. Take care.